Tesla CEO Elon Musk came to the realization that in order to promote free speech on Twitter, he needed to make changes. His angry but generous $54.40 bid for Twitter achieved that. Many claim that Twitter's investors would benefit from a company that is losing money and is beset by fraudulent users. With increased control over the social media network, Elon Musk can potentially interact with his followers. Musk's $44 billion. It was accepted by Twitter's board of directors on April 25, opening the door for the billionaire to buy the business and go private. What effect will this have on Tesla stock? Will the price of stocks rise or fall? Be sure to read through to the very end to find out. Insiders say Elon Musk is set to become Twitter's CEO, if only temporarily, following his acquisition of the massive social media company. Due to Musk's obsession with Twitter, which may constitute a diversion from his already demanding schedule as CEO of the electric car maker and aerospace company SpaceX, the report caused Tesla's shares to drop by almost 7. Many people have doubts about the CEO's acquisition of this social media company, arguing that Musk's changes to the management and board of directors and his review of CEO compensation may put Twitter's economic model in jeopardy. The amount of time spent on social media is already decreasing, with Facebook, Instagram, and Snap competing for users' attention. Consequently, the CEO of Tesla might have to decide which company to focus on, as stakes for Tesla investors are increased by this. The back and forth between Twitter and Musk has been well publicized for months. Investors will be closely monitoring how Musk's purchase would impact their portfolios now that a deal is being worked on. Particularly concerning are the ramifications for Twitter users and shareholders. The social media company Twitter accepted a $44 billion offer from billionaire Elon Musk. Investors in the tech and social media industries will confront a radically changed environment if the transaction closes. When Twitter turns into a private company, there will be much less transparency in terms of finances and operations. Musk also alluded to the possibility of impending big adjustments to the user experience. The billionaire, who boasts 83 million Twitter followers and has been known to sling jokes and insults at the social media platform, has made it clear time and time again that he wants to change it by promoting greater free speech and granting people more choice over what they see. Musk was able to work on the service out of the public eye, away from investors, regulators, and other observers by taking the business private. If and when the deal is finalized, Twitter stockholders will get $54.20 in cash for each share of Twitter stock they possess. For shareholders, especially those holding a high number of shares, this represents an inflow of cash. Alas, if and when the acquisition will be finished are the most crucial factors to take into account. The Twitter board of directors has approved the sale, and the firm has signed a final deal to be acquired by a corporation fully owned by Elon Musk. The deal is not yet finalized, though. The transaction is subject to regulatory approval and other closing conditions, as well as approval from Twitter shareholders at the company's next annual meeting. Twitter states that the deal is anticipated to close later this year. Following the agreement's release on Monday, Tesla's stock fell, reflecting investor doubt about Musk's commitment to Twitter if his takeover is finalized. Bruin Dolphin investment manager Zoe Gillespie claims that investors' fears over Musk's diminished role at the electric vehicle company are the reason behind the decline in Tesla share prices. I think investors are wondering if Tesla's board will go deeper into Twitter or if it's just a temporary problem until the real situation is known, she stated. It hasn't been well received by the market. This, we believe, is due to worries about whether senior Tesla executives will also be impacted by the acquisition. Analysts seem to feel sorry for Tesla shareholders who think the company's reputation would be damaged by the Twitter transaction. The deal would increase Musk's collateral to debt ratio, but Wedbush analyst Dan Ives says it's far overdone. The CEO and founder of the London-based consulting firm Business Consult My App, Mike Rhodes, believes that Musk may find the Twitter agreement to be too much. He stated the projects he's working on at Tesla and SpaceX can hardly be described as unambitious duties requiring little more than passive administration, in a recent interview with Fortune. As he sets out on yet another exhausting journey, one can only assume that some of the earlier vigor he injected into his endeavors will be lost in the process. Rhodes claims that Musk might lose some of his luster if he decides to concentrate more on his new business, which could result in worse performance or declining stock prices at Tesla and SpaceX. Is there a significant risk to the value of Tesla's stock? Tesla's stock has just dropped by about 9%. Following the news of an agreement to acquire Twitter, Elon Musk sold shares in Tesla for roughly $8.05 billion over the course of 3 days. Kevin Kaiser, a financial specialist at the University of Pennsylvania's Wharton School, believes that because Musk has demonstrated his willingness to raise the necessary funds, the Twitter acquisition is more likely to go through as a result of his stock sale. We believe Musk is being prudent by selling shares now rather than when the acquisition is expected to finish, Kaiser said. It makes sense to sell shares before people expect it to happen so that his selling does not place unusual short-term downward pressure on the price. Surprisingly, Wall Street has not seen much of an influence on Tesla's stock performance since the release of Musk's sale docs during the past 2 days. Even though the stock had just dropped almost 12% for the week, shares were up more than 3.4% as of this writing, trading at about $907.50 in New York. Richard Windsor, the founder of the research firm Radio Free Mobile, claims that although Musk's acquisition of Twitter is fantastic for Twitter's current shareholders, it raises the danger for Tesla investors. He continued, there might be some management roles. So frankly, if you look at Tesla and what he's likely to do with Twitter, Windsor doesn't think there's going to be too much of an issue. But Windsor told Fortune that if Tesla's renowned CEO was less active in the company, share values may stabilize. Windsor claimed to be the last person to propose that Tesla is valued fairly by using Tesla shares as collateral. Analysts claim that Musk is also putting himself in a good deal of risk, even if he is theoretically the richest person in the world and his 2018 pay plan permits him to exercise options for a mere $70 per share. Sudden decline in the electric vehicle maker stock might bring him a great deal of misery. Windsor concurred that it was important to keep in mind that Musk had arranged financing for the acquisition of Twitter using a portion of his Tesla shares, and that connecting Tesla stock to the deal created a new risk for Tesla stock values. Senior financial markets analyst Susanna Streeter of Graves Lansdowne said that in the coming months and years, Musk will likely have to devote his attention to maintaining income and dealing with regulatory crackdowns on big companies. This will make his work at Twitter tiresome and time-consuming. However, considering that Musk has consistently sidestepped punches directed at his alleged overambition, whatever obstacles are thrown his way, hurled at him, he's certain to come out bruised, but still formidable. Musk seems to want a significant amount of control over the company's operations, which could put him under pressure. Regarding his acquisition of the social media network, Kathy Wood of ARK Invest is rather upbeat and seems to think that striking a balance is something he can handle. Rather, she suggests that Tesla will benefit from Elon's takeover. Analyst Roger Kay of Endpoint Technologies Associates believes that Tesla's stock price is unlikely to suffer long-term damage and may quickly reach its previous level. Given that Twitter is a well-known company, it presents an interesting problem. Kay says he's just using Twitter as a platform, not so much about making it a successful one as it has already been demonstrated to be. Because of the transaction, analysts are attempting to determine where Tesla's long-term prospects point. On the other hand, Musk is renowned for his exceptionally hard work ethic, which includes sleeping at Tesla's factories and assisting colleagues on assembly lines. Despite the fact that Tesla and SpaceX had some of their busiest years ever, Musk seems to be overcommitting if he takes on more duties at Twitter in his role as CEO, but it's unclear what Musk's final responsibilities as acting CEO will be. We think that Musk's handling of the whole thing and his ability to successfully juggle all of his jobs will have a significant impact on the performance of Tesla shares. What impact does you believe Musk's acquisition of Twitter will have on Tesla stock? Please leave a comment below